The electric vehicle industry is no longer just about who can build a car. It's about who can scale globally, innovate faster, and capture investor trust. And in 2025, the three EV giants that everyone is watching are Tesla, Rivian, and NIO. But which one is the real winner for your investment portfolio this year? In this video, we'll compare these companies across all critical areas, including technology, production scale, financials, brand strategy, risk factors, and market momentum. If you're serious about EV investing, this breakdown will help you make smarter decisions. Let's begin with the obvious leader, Tesla. Tesla is not just the biggest EV maker in the world, it's also the most diversified. In 2025, Tesla is delivering over 2.5 million vehicles annually, with factories in North America, Europe, China, and now India. Its best-selling models, the Model Y and Model 3, continue to dominate global sales. But Tesla isn't just about cars. It's evolving into a technology ecosystem. Full self-driving, Dojo supercomputers, energy storage solutions like Megapacks, solar roofing, and AI-powered manufacturing. Tesla is profitable, cash flow positive, and has over $25 billion in cash reserves, giving it flexibility during downturns. However, it also faces pressure from investors expecting continuous hypergrowth, and from governments increasingly regulating AI and autonomy. Now let's talk about the challenger from the USA, Rivian. 2025, Rivian is finally stabilizing after years of burning capital. Known for its R1T electric pickup and R1S SUV, Rivian has carved a niche for outdoor enthusiasts and utility-focused drivers. It's backed by major partnerships, especially its long-term contract with Amazon for 100,000 electric delivery vans. Rivian is building a long-term path to profitability. It's improving production efficiency at its Normal, Illinois factory and planning a second plant in Georgia. Though it's still operating at a loss, Rivian has reduced its quarterly burn rate significantly and is now delivering over 100,000 vehicles annually. But investors must note, Rivian still depends heavily on Amazon orders and premium buyers, and it must prove it can expand beyond its core niche. Next, we look at the rapidly growing EV leader from China, NIO. In 2025, NIO is pushing hard into battery swapping tech, autonomous driving, and AI-enhanced luxury vehicles. Its unique battery-as-a-service model allows users to lease battery packs and swap them in minutes, an offering that's especially useful in crowded urban markets. NIO is also expanding aggressively in Europe, with a strong presence in Norway, Germany, the Netherlands, and Sweden. Its ET5 and ET7 sedans rival Tesla S Model 3 and Model S in both performance and design. NIO is now delivering over 180,000 vehicles a year and continues to invest in R&D. However, NIO faces major risks: China's slowing economy, increasing government intervention. In U.S., China tensions that could affect stock listings or investor sentiment. Still, for risk-tolerant investors, NIO offers serious growth potential. Let's now compare the financials. Tesla is far ahead with consistent profitability, high margins, and the ability to self-fund its innovation. Rivian is improving, but still in the red. NIO has stronger delivery numbers but thinner margins and relies heavily on Chinese government support. From a financial stability point of view, Tesla is the safest. But remember, safety often means lower short-term returns. If you're chasing high growth, Rivian and NIO might offer more upside, with more risk. What about brand power and customer loyalty? Tesla clearly leads in global recognition, especially in the US and Europe. Elon Musk's personal brand adds fuel to Tesla's visibility, though sometimes it also creates unnecessary volatility. Rivian has built a strong reputation as a lifestyle brand, often compared to Apple in its minimalist design and adventure-first approach. NIO, while lesser known in the West, is incredibly popular in China and gaining brand loyalty in Europe through innovation and customer service. Now let's consider innovation and future potential. Tesla's investments in robotics, self-driving, and its in-house AI training chip are setting it apart not just in EVs, but in tech overall. Rivian is innovating in vehicle design, software updates, and commercial delivery, and plans to expand into smaller, affordable EVs. NIO is leading in battery swapping, in-car AI assistance, and has announced plans for solid-state batteries in future models, which could offer more range at lower weight. So what's the final verdict? Choose Tesla if you want a safe, dominant, long-term tech stock with solid fundamentals. It's not likely to 5x overnight, but it could double in a few years and remain a cornerstone of clean energy investing. Choose Rivian if you're looking for an American EV underdog with room to grow. The potential is high, but you must accept the volatility. Choose NIO if you want exposure to China SAV revolution and you believe in battery innovation, but be ready for geopolitical risks and possible US delisting concerns, or diversify. Build a mini EV portfolio, 60% Tesla, 25% Rivian, 15% NIO. You'll get stability, growth, and innovation, all in one package. If you enjoyed this detailed breakdown, don't forget to like, subscribe, and comment below. Which EV stock do you believe will win the race in 2025? Tesla, Rivian, or NIO?